go. It is Sunday, 2/23. 2 months almost gone in this year, and the needle is moving. And so we're looking at the S&P. I will have a video tonight. Please watch it. Please. It'll be like 5.5 minutes. If you go to bed early because I'm on the West Coast, watch it tomorrow. It's going to be very simple. I already have the work. I have the bones, and I can tell it's like the best one I've ever made. Maybe, maybe not, but it'll be good. I just want to say that we only had a red Friday. That's what happened, but it feels like the end of the world. In fact, on Thursday, we were at highs, all-time highs. And on Friday, we weren't. That's what happened. That's the only thing that happened. And if you're thinking to buy the dip, you should watch this video. And if you think that this is the end of it, end of the run, you should watch the video. You're both wrong. Okay, so we have about 100 tickers to go through. They will be broken up into 3 videos and alphabetically ordered. We'll start with the king of stocks, Apple. Strength in Apple. Good morning. Strength in Apple is not necessarily good for Apple on big red days. Money hides in Apple. So if I'm a money manager and I have $4 million that I'm managing for somebody, I don't need their permission to sell whatever I'm in, Palantir or something a little bit more aggressive than Apple, and hide in Apple. So you will see have strength in Apple on bad days. And then if they figure out that that bad day should be a bad week, then they sell Apple too. So, but nevertheless, it did do well on a relatively well on a bad day. So above 250, Apple can set a new high. I can't wait for that to happen because I will aggressively short it as a stock. It's an awesome company, don't get me wrong, but it's pretty boring compared to the rest of them. It's still about an iPhone and its peripherals and the services around the iPhone. Take the iPhone out, it's a one-trick pony. Its revenues will drop considerably and it will not be a significant company. And so Tim Cook is boring. So I don't think it deserves much more than it's already done this year. I will let you know how I play it. It'll be very conservative, nothing crazy. Again, fundamentals insane, but compared to what NVIDIA is doing and what other companies, Microsoft is doing, it's falling behind. There's no doubt about it. 235 to 237 should be solid short-term support. It might be a target as well, 235, 34. Target 3 would be like 224. That is if we have a red week in the market. I don't think it falls on its own without earnings. Now, if you lose 217, 218, we open the door for much, much, much lower prices. But that would be because the market is having a conniption, and that's not a guarantee. So upside potential is still there. It's almost at all-time highs, and markets are at all-time highs. It's not shortable here. I said if it pops and makes a new high in a big way, I will short it because I want to take advantage of people who are unrealistic with their expectations. So it'll be like a sold call somewhere out there, and I'll share it with you. I will not catch the falling knife in Apple. ABBV, it is definitely not an obvious point of entry. NOPE, nope, not an obvious point of entry. This is an all-time high. You just now, if you just now are comfortable buying it, that's because you're going on emotions, on logic. You shouldn't. If you look left, the person that did that, what you're about to do here, lost a bunch of money. This thing just rallied 20% in 3 or 4 days. Not for me. If you've waited this much, where's the rush now? This is an all-time high. Not for me. Good company and all, maybe, but you're chasing. Wait for a dip towards 194. Better yet, if you can come down anywhere below 186 as a trade would make a better entry point. If you're in it for the long run and you don't care if it's a little bit less and a little bit low, a little bit lower, a little bit higher, then what's the rush? If you're in it for the long term, this argument doesn't hold water. Think about it. If I say, oh, it might drop $5, you know, I don't care $5. You do, because you're going in when somebody that knows what they're doing tells you maybe it's not. But anyway, if I'm in, I'm not adding. That is 100%. And if I'm looking to get in, I would just take a little nibble if I'm that, if I'm broken up about it. Airbnb, everything I said about ABBV, look at it. If somebody told these people up at the right-hand corner on the top right if somebody told them, hey, Nick says not an obvious point of entry, because if you look left and you ask the person that did that before the last earnings report, they would have saved themselves $20 a share, almost. Yeah, audio, that's on your end. So that's perfect that it's right below this one. Okay, so not that AbbVie will do the same, but that's usually what happens. You get into a prior fail. Anybody stuck up here, they want out. So the breakout line is 142. The breakout zone extends through 136. Airbnb, it's got good revenue growth and all of that, but I don't know what that is. Why did it drop? Maybe it's seasonal, maybe it isn't. Anyway, not for me up there. Here, falling into 138, I can understand somebody as an investor. I would also keep that same, add at the tail end of every stock that I say, yeah, it's okay to be long, but not all in. You should add that last piece, but not all in, because the markets are at all-time highs. Even if this is like an unbelievable bargain for Airbnb, if the market's correct, this one will get also corrected. Nobody holds up in a falling market, I promise you. Archer, aviation. So this whole sector is tricky. Please be careful with this stuff. Very choppy, no income, 4 days, and you get an earnings report. Whatever I tell you now does not matter at all. In 4 days, they're going to react based on emotions, and God knows where they put it. 14, 15, or 6. Both of those are possible. You do have resistance at 1150. You do have support around 8 or 750 for the short term. AIG, I used to trade this a lot. It used to be one of the heaviest options trading stock ever. That and Bank of America, but I haven't touched either from that perspective in decade. Okay, so you can look left and see the same behavior. They rally and they give it back, and they're chopping a little bit lower. You can say it's sideways. You have multiple highs and multiple lows that have been rejected. So it's stuck between 72 and 78. That's why I said it's a good trading stock. That red thing on my screen, the red W, says, okay, target one was 73, but you can argue that it almost did that. But I would imagine that they would try to go to 73 one more time. And if they're successful at 73, they have support at 72. But if that fails, I think they go to 69. 67 would be an extreme low, and that would change the game. Breakouts, you have to overcome 78, give or take, definitely 80 and 81. Akamai, I lost track as to what they do, honest. It used to be a very popular stock back in the day. Provision cloud services. Everybody's a freaking cloud service. All right, but technically I can tell you one thing. The fact that they lost 88 might mean they're going to 64 or 62. They do have support at 70-ish, 71. The fact, cybersecurity, okay. So if they don't come back to 92 or higher, they're probably going to drift lower in a series of selling the rallies. Because if you see it, in theory, not to scare anybody, the downside should be 16 to, I hate to say it, 35, maybe even more dollars from here. So 16 is 72, 71, and of course 35 is below 58. I don't want to say it's going to 58, but if the market's correct, why not? Let's see here, the daily chart. Oh, that's a weekly chart. Yeah, that would be a bargain, to be honest. So, whoa, what the heck? What the... Good Lord, I did not remember that part. Okay, so here's the good news and here's the bad news. These dips back into 75 could be a base in order to explode higher to 170. What you just said is going down. I didn't say that. I said it's losing short-term support, which could cause it to fall lower, which is still correct. On this fall, if it doesn't find footing around 70, like we said, it might have a little bit more to give. I would be shocked if it falls below 60 too far, because that is a multi-year since the 2008. That's where it fell. Look, 2008, another attempt a couple of years later, couple of years, breakout fight for 2 or 3 years, breakout confirmed, and it's confirming again. So it should be inside a support zone that's pretty wide. Hopefully, if they have that chance, the next time they do a big move, it's breaking out from here to go to 160, 170. But I wouldn't, you could convince me to get long on these dips for a multi-year strategy, but there's no rush since it is multi-year. Take a small bite if you're not long and then add to it down the line. AMD, I would not touch AMD, to be honest, for myself, not even on an investment basis. Short-term trading comments. You can see how the sellers are in charge. They're selling rallies, almost mirror image of each other. Like you can copy it, paste it from here, to be honest. Look, pop, drop, lower low, pop, drop, lower low, repeat, repeat, repeat. In the process, they lost this zone, 130, 128, 125, this zone. Between 141 and 120, somewhere in the middle, lies a big level for AMD. If they don't get back up there, I bet you they go to 80 or 75 over time, especially if the market's correct. If I'm long, I don't want to panic as long as I have the ability to double down. I wouldn't double down here. The markets are at all-time highs. Leave dry powder, isn't that what they say? That's the bigger picture. Short term, I think it goes lower. Look at this candle from the earnings. They did not do themselves a favor. 121 should be a monster resistance line. Oh, look at that. It's a zone from 118 to 123. It's going to be hideous. Oh, look at this. Wait. This yellow thing. I copy paste prior behavior. Look how accurate this is. This is crazy stuff. You see it? Look, if I move it to the right a little bit, this is copy from prior behavior. If I move it to the right, look at this. It's like exactly how it happened before. There are no coincidences in this on Wall Street. Okay, so let's see, where did I get this from? Looks like right here. I copied this and I pasted it here and it repeated almost tick for tick. So this one could be going to 100, maybe even the mid 90s. So there's no rush. No rush. Amazon. I've got a puppy screaming his head off in the background. Hopefully you can't hear him. What do they do again? Oh, they deliver packages to my front door. That's what they do. I have like 3 coming in today, 2 yesterday. I can't stop. Okay, so the bad thing is that these boxes that are above, the purple one says huge resistance, eventually an opportunity. I don't think this comes this year, but it's there. So Amazon needs a little boost from an NVIDIA positive reaction. Ooh, I just gave you a hint as to what's really important this coming week. Okay. Look left, this place where they're at, 214, look left. You will find it being pivotal quite a few times. I don't remember what these boxes were, but you can trust my levels that they've meant something in the past. So this is a prior fail. Battle, they took it out. They confirmed it again and again and made a new all-time high. They confirmed it, broke a high again, higher high. And now they're at it. It doesn't look like it's an easy hold, so they might overshoot to 206 and that still be okay. But then there lies the question. Can they get back into the red dotted box, which is 222 or higher? It's going to take a lot to get into the bottom half. It's going to be a monumental effort to get into the top half of it. I think the middle part, which is 230. What is this? Look at this. At some point, we had some sort of an overnight weird tick on Thinkorswim. I'm going to move it and tell you that that's going to play a role on the rebound if they get there. You can sell a call spread if they get there on that one. Places where I would catch the falling knife, probably down here for me. The market is overdone, and this one is vulnerable because people love to hate on it. When they used to hate it, when they used to love it, they hated it so hard, and then it would correct a lot. This is a little different company now, but I think it's still vulnerable. It trades like a momentum stock still. Good spots to turn around a 208 zone. If that fails, 202 to 196 zone, I think 196 is very important, and if someone wants to add to their positions, maybe there would be a place, and even then I would sell a put or a put spread rather than just buy calls. If I'm in the stock already, I am not adding on this dip. This is just one red tick. Arista Network, you saw my post. They reported and they fell, and everybody's shocked because the report was pretty solid. And that proves the point that we try to promote. It's not about the actual reports. It's about the expectations, and the expectations are hideously unreasonable. If you want to blame Wall Street or point the finger at Wall Street and say, Wall Street, you are a moron, you would be correct. Because a collection of silly people makes one gigantic moron behaving like one unit. I don't know what goes on in their minds, but they focus on things that don't mean as much as they should, and produces results that doesn't make sense. Exactly. It doesn't make sense. I would be long the stock. I think I sold the put at 60 or 70, whatever the trade I said, very brave. So give me the stock. I'm not going to defend it. If I did a credit put spread, I will not defend it. I can tell you that if they lose 97, which is that giant dip here, don't remember what that was all about. But if they lose that point, 97, they will probably go to 85 or 80. Any crash in the stock, I would add it to my portfolio as an investor. Look at this P&L. You will not find a better P&L than this one. You will not find a better P&L than this. If I'm teaching a business class for a person, hey, I want to learn how to grow a company, what should my financials look like? That's what they should look like. Huge growth on the top line and the bottom line, huge growth on a quarter-to-quarter basis, very sustainable, perfectly ascending slope on everything. There is nothing wrong with this company except the expectations. The stock is pretty high. It's not like it's a bargain up here, but it has fallen, a reversion to the mean. Have you heard that? It has reverted to the mean, and now it's at the lower end of the mean. That thin blue line you can see at the bottom, you can conceptualize that that's the bottom end of the range. It's not really, but you can conceptualize it, and it's approaching it. So it could be oversold soon. Here are 3 bubbles that I had before, and I extended 2 more of them to show you how important levels are. In 2024, July, they went up there and crashed. They attacked it twice, failed, broke out, confirmed the breakout, a new high heaven. Can you imagine being the person that bought it there? Okay, this is where I would have said, nope. Maybe I would have said nope here and here and here and here. That's fine. What did I miss? I just missed a little bit upside. And if you're an investor, you did not close it up here. I guarantee it. It's like, oh, you missed out on all of this. And so did you. Unless you cashed it up there, then you didn't do any better than me. And confirmed, now it's falling into the confirmation. If you lose those bubbles on a closing basis, I think you will probably go into the 70s in the stock over the next few months. I can tell you there should be a bounce. And if this week is green on Wall Street, this guy will be probably at 110, 112. So as a trade, I get it. But as an investment, I'm not adding on this dip. There you go, 60. I'm pretty consistent. Sell a $60 put. That was the order we did when it fell hard. If you missed out on that trade, you can copy it or do something similar to it or reach out in the live and we'll figure it out. If you lose this guy, look at where we're at Friday. Look at where we were January 27th. Remember January 27th? That was a huge flash dip. The DeepSeek thing. Yes, thank you, Echo. I was asking, what the heck was that? That was the DeepSeek thing. If we lose that low, you can imagine losing $20, $15 to $25. So I'm going to split 19. We'll say you can lose $19 from here or $18. So you can be at 80 just from that, technically speaking. And it would still be an opportunity. If I took my trade, which I did, it's in one of my smaller accounts, I would not defend it. Bring it. What are you going to do? ARM, I would not rush into ARM. ARM does not have the same P&L. It has an amazing margin, but it's a weird P&L. So there are other things on the operational level that I'm not comfortable with. So rallies might be sold into 155 through 158. I don't think they can crack above 162 without a miracle. Having said that, the miracle could come whenever NVIDIA reports. Thursday, Wednesday, I don't remember. Look it up. I will have it in the morning note because this one will move with it, up or down. And you can count all the other heavy AI company, chip company, SMH companies, anything semiconductor related that has an AI brush will follow NVIDIA. And make no mistake about it, Wednesday after, okay, thanks. Make no mistake about it. This whole rally is on the back of what NVIDIA said in May of 2023. They reported very disappointing earnings, but the stock rallied 30% or more because they said next quarter, we're going to almost double. And they did. And they took the whole market with it, Microsoft and company. So there's a whole ecosystem following NVIDIA. And that ecosystem will be on crack, up or down this week. Hopefully they come out and say nothing new and nothing bad and people just shrug it off. I doubt it. We're going to have a big week or in either direction. And this one is in the line of fire. So do you want me to tell you? I tell you there's a resistance at 168 and support that needs to hold at 124. That's a wide range. Let's narrow it. 158 to 162 versus 136-ish. Those are interim resistance and support. So sellers above, buyers below. Don't be hasty. If I'm long, I'm not adding. AVGO, I was short a while back, made good money on these drops, and I'm not short now. Another good P&L, not as good as Arista Network, but pretty darn good. A major contributor to the S&P. This too will move with NVIDIA. If this one gets to 240, I think it goes to 270. That means it's broken out. I don't think it's easy. I think sellers are at 233, 240, 42. And anything above 248 is fair game. Although there are prior failures there, I don't think the bears can hold the bulls if they go there. Meanwhile, strong buyers throughout below 196 being sharp. This point right there on the deep seek on 127, but really the levels are more like 184 and 168. See, I'm just going to extend from the left side and bring over to here, big concepts. So you can see it can fall up to 25% and it would still have multiple levels of supports. And we haven't even started falling. This is still an ascending channel. That's what I'm trying to instill in everybody, that if you zoom out, this thing is in the stratosphere. That's crazy stuff, folks. 185 is where I personally would consider going long. Personally, me, the very conservative, looking for potholes, me. Look at this monster move. This does not look like a oversold stock yet. Am I right? This visually doesn't look like it. Boeing. Thank you, Boeing. Made us money this week. Made me money this week in the live room. So, I don't hate the company. I love it when people hate it. I don't love the company. I hate it when people love it. I'm like Buffett with this thing. A few days ago, I sold naked calls for December in size on Boeing. And I was ready to double it this week if they had come up there, but they didn't. So I made half my money already. I'm going to close it. But on the next rally, I will sell more. Anything above 188 would be pretty nice for the bulls. They probably can get to 200 and 202. I still wouldn't lose money on my trade, but it looks like they want to break out. I just don't think it's logical for them to do that. There's nothing exciting. The P&L is not that exciting. I mean, it's a duopoly, but other than that, where's the exciting part? What is this? An earnings trade? Okay, so this box was for the earnings. So on a pretty violent day in the last couple of weeks, the earnings, we looked at the options, and that's the range they were suggesting that we need to trade. And we're inside of it for 2 weeks. I don't think it's a coincidence, right? We're, in fact, almost at the middle of it. So this just says there are buyers below and sellers above, and that's exactly what happened. So as it approaches 185, 86, I think the sellers will be pretty strong. I don't think it breaks out. And as it falls into 167.8, I think it finds footing pretty solid. So that's how I would trade it. It's range bound, and it will follow the market. Let me turn off all the lines and zoom out to see if there's any Okay, so now we have a little bit more information, a lot more information home. Okay, I'm glad I did that. All right, so look at it and you can see how there is a failure at around 200. Let's round the numbers. You can see it in the middle of my screen. We look left, you can see it's been pivotal. Like if we pick this big dip here from 2022, middle and done, then above it, they're pivoting around. Like if you put a skewer going right through my middle of my screen, just above the red line. So I'm going to tell you that 200 is pretty pivotal. And what's it going to take to go above 200 by far? It's not going to be easy. They are selling rallies, huge rally. I sold calls on this one too. Big disappointment, smaller rally, bigger disappointment, and now another rally going into a pretty disappointing level. I don't think it's easy. I think it's easier to get back to 160, 155 than it is to go to 215. Alibaba, I'm all in. No, I'm not. I would not touch the stock, not even with your money. So good company, maybe. It used to be. It used to earn more than Apple. They used to do, what, 100 billion in one day at one point, the singles day? Okay, so the person asking me, if you're asking me to short it, permission not granted. If you're asking me to go long it, permission not granted. Well, what do I do with it? Nothing. You just look at it and you go, wow, and then you click on the next ticker. If I'm invested in it, okay, I manage my risk. If I'm looking to invest in it, invest. All right. So you just missed out on 78% in under a month, or just about a month. Why now? Oh, it's great now. Is it? China has one of the biggest quantitative easing programs out there. You think they want to do that? No, their situation is pretty dire. That's my read on it. I don't know much about China, but if somebody is trying to, if a store is having the mother of all sales, the sales are down in that store. Does that not make sense? That's what's going on over there. Last I heard, they had the mother of all QEs going on over there because they need sprucing up, don't they? So it's not for me. Technically, I see it. You broke out from 115, you may have upside a little bit more, but that would be more of a target zone that it's going into, and you're pretty late. How about buy a dip? Have you ever seen a chart like this that looks like a good baseline for future profits? But then you look left and you say, hey, but it was, maybe it goes to 270 and 300. I will wear a pink tutu and dance in front of my house and post it on social media if it goes back up there. Oh, what? Maybe I will, maybe I won't. I've said that before, by the way, and I did not need to. All right, so not for me. THTH, what does that mean? Okay, that's a new acronym. That's not new. It's an old acronym that I haven't invoked in a long time. THTH. It's too high to chase and too hot to short. If you're looking to short it, leave it alone. And if you do want to short it, just buy a debit, put butterfly. You will hold me to it? All right, you're on. Who is this? Bank BK is Bank of New York. That used to have a different ticker. BNY, wasn't it? CNY? BNY. Anyway, Bank of New York, Mellon. I'm short banks. I would short banks. I would not be long. Well, if I'm long this bank for an investment, enjoy it. Do whatever you do with your winning investments. If you have target, if you want to book some, sell some covered calls. I don't know if that's something doable with this ticker. But what is your question here? I guess I should have read it if you had one. Is this an all-time high? It is. So how about we ask these people the last few months in its life, what happened the last time they bought it? Okay, this was the .com. All right, so let's ask the 2007. They were both party eras. No, that didn't work out. 2015, we had a little correction. So not an obvious point of entry. So this is a monthly chart. Okay, this is a monthly chart. Every candle is a whole month. And based on this red shape, there are two red shapes actually. An ABCD and looks like a W inside of each other. Anyway, they both say it is possible to be at 66, 68 in the next few months. If that is something that concerns you, maybe you don't want to pile in. As long as it's below 95, this thing is shortable. In fact, I'm going to add it to my watch list. If it carries cheap puts, I'm going to sell calls to buy puts. Good P&L though. Look at it. That's a pretty good P&L. A lot of sales growth for a bank. So I will study it more. Just caution up at these levels. It's nosebleeds. Baker Hughes. Wait. Okay, so this is the same monthly chart. So we're looking back to 2017, 2015, 2014, 2011, and 2008 and 2005 levels. Not a place that encourages, oh, okay, now is the time to go long. This one is probably going to 43 and 41 before it goes to 51. If I'm short, I stay short. If I'm looking to get long, I would not. Hey, look, wait, what is this? Okay, so from here, around this time, I pasted this path that points to here. It didn't quite follow the path, but it went to that level. So I'm going to delete it. This was a copy of this, and it made the same level, but a little bit faster. So here's what I'm going to tell you. If it doesn't get out of 47.50, 47 to 750 is a sell zone. If it doesn't get out of it, it's probably going to 43. And if it loses that, it's going to 41 or 40. You can catch a falling knife there for a trade. Builder. Okay, so I know people that like this stock, or at least used to trade it. And always on the rally up, they boggled my mind as to how could these real estate stocks be doing so well. And now that's the price action I would have expected. So you can see it's falling into a support zone. That's the good news. So it should bounce. The bad news is I don't think it can break 170 or 180. And if it doesn't, then it's probably going to 110 because the stock has to do something. And they will bounce. The question is, can they, with the bounce, beat the prior fail? If they can't, then they're going lower, drifting lower like this. So what if they repeat the same pattern from here to here? So they fell, they consolidate, and they bounce, and they make a slight lower low. What if they do something like that? I would use strength to fix my problem if I'm long. I would use strength to fade it, like if I sell a credit call spread. Or if I go long here, you know, just enjoy the long from here to here and don't overstay your welcome. Bristol Myers, I don't know how these companies are not falling apart. We have a health czar in this country that's out to get them. So things are not going to be easy for the whole sector. This can bounce again and test 61. It's been a pretty pivotal level, 61 through 66. So be careful. Support scattered though. If it falls to 50 or 47, it will find support. I'm a little worried about this area here. There's not a lot of volume. So there's a pothole waiting in volume. Like if we wake up and it's at 42, it would not be surprising. Okay. Yes, C4. So a couple of areas of concern. Up to 59, it might be easy to get to 59, but I don't think it's easy to get above 59. This candle matters. Whatever happened on February 6th matters. Berkshire, I am short. It's coming into earnings. No, it did earnings. I would stay short. Prior fail. I think this one will fail too. Good company, no doubt. Not a momentum stock, and it's trading like a momentum stock. I challenge it. I have sold calls and credit call spreads. I haven't added puts, I don't think, to buy. But I think it would drop down to 460 in the next few weeks. If not, in the next couple of months, it'll probably be at 435. Something like that. We'll see how it behaves. Nothing against it. It's just too high. Okay. Oh my God. This better have a good P&L. Okay, so it's not a bad P&L, but this is way too exciting. Let's look into the fundamentals. I honestly don't know much about the company as far as inner working. So good margins. on the gross margins. Okay, operating margins, where are they? United States, Europe. Okay, what do they do? Cardiovascular. All right. Whoa, $11 billion in debt. What kind of debt is it? It is not good debt, but it's okay as long as it has cash flow. It does. Income statement, good growth, double digit, so I won't argue with that. Statistically speaking, is it expensive? It is not hideously expensive, but against itself, it is somewhat. So, okay, my comment is very mild on this one. Where's the fire? Why now? If you look at it and you draw, if you draw an ascending channel, so I think this one is an automatic trend. So if I choose a span of time, it'll give me like a regression analysis, a visual regression analysis. You can see that it's above at any point in time. If you look left and you draw a channel, it hasn't been this high relative to this channel is going through, and like looking left ever. So it is not an obvious entry point. That's like the visual representation of that statement with this kind of a P&L. Not for me at this stage. I would not be shocked, and this may shock some people, to see it below $96. And if it does go below 96, I think it goes to 89, 90, and it would be normal. Going to 84 and 2 would be a good bargain. How can it get there? All it needs is just a hiccup in the market and a bit of news for itself. I don't know what this one is. Beyond. Earnings in one day. Whatever I say does not matter. That's a pretty ugly chart in a stock market that does not want to stop rallying. So I don't know what to say about that one. What do they do? E-commerce platforms. Furniture and home furnishings products. Yeah, that's definitely not me. No. If I'm going to do e-commerce, it's going to be Amazon. Not for me. $8 to $9 is going to be difficult to overcome. $9.40 and higher will be definitely difficult. Above $9.50, $9.80, it's the moon. So let's see what they do on the earnings. Be careful. Citigroup, again, another big trading stock in the past. I think it's easier to get to 74 than it is to 87. I have not shorted it of late, but it is definitely shortable. I'm going to look into how cheap the puts are. I may buy a lottery put, which I rarely do, like a pennies out in time and see if it plays out. I've been expecting the dip for a while and it hasn't materialized. The banks have been super hot. That's the XLF. That is a bearish chart, by the way. Okay, so not jumping ahead, let's go back to Citigroup. Definitely not an obvious starting point, and more downside coming. I think they closed this gap. So 75, 76 is easier to get to than, say, 85, 84, or a new high. Falling out of control. What do they do? Engages provision of informations. Okay, these descriptions are starting to be very, very vague, like .com, yeah, pets.com and this.com and golf.com. They're starting to be like that. They had a target that I think they're approaching from losing 440. And if you consider they just lost another neckline zone, they have another, I don't want to scare people, 40 to 60, let's say 50, maybe even 150. Yeah, so it's trying to find support, and it's going to probably find it around 300 and 280 zone. It's a falling knife inside of a very, very aggressive market. You got to question the conviction of the new buyers. Why can't it find support? Follow the crumbs, the financial crumbs. The levels are, yes, you have support, but it's scattered from here on down. Maybe selling a put to own shares. Do I have any lines from before on this one? I don't remember though. What is that? So that's important. Whatever happened here. April 5th last year. This flash low is about where we are, no? Yeah, they're losing it. So why would they do that? Be careful. See how they behave around that. Caterpillar. So I thought they would pop and drop. They just dropped to my target and then some. Good company, but Caterpillar rallies at the drop of a hat. And you have to wonder why it is not leading. It is a global company. It does rely on global growth. Has support through 325, 320, and more support lower. So that's the good thing, the defense part. The offense part is, what's it going to take to get it above 370? I mean, I've seen some frothier stocks do really well, even of late. Why is this one struggling? The zone into 370 looks impossible right now. And even if it spikes 7 or 8 or 10%, it's going to find a lot of sellers. So be careful. That's what I'm saying. So it could drift lower. If I'm long Caterpillar stock, I'm not adding here. I think I would get another addition around 280, 290 if the stock market corrects. Let's zoom out and see a regression thought on a weekly basis. You can see how if you draw a channel, you're hovering above the channel. Look at it. I wish I can do it, but if I do it, it's going to bring all kinds of other things. So I'm going to just take the period of time. I don't draw it it draws itself. These are math. Okay, there is one already. If you're considering the time period from the bottom of the October, just from the bottom of October, we've been on a steep ascension. It's just at the low end of it, maybe a little bit lower than that. I'm going to take that and say, no, go back in time to here. And let's see what it looks like. So you can see how, if you consider from 218, it's not even at the mean yet, which means what? Don't be overzealous jumping in too soon is what it means. It can go lower. CCJ. That is a bad spill, technically. I know we've covered that stock before. Let's go to a daily before we go to a weekly. It has good support in 237. These two bounces are legit, and before them as well. There's a little weakness below, but I think this has been well consolidated, so it's not like a gap that I'm worried about it, but I am worried about the rallies. Very violent stock. So if they can produce another rally like they did back in September and get above to 65, that'd be amazing, but I would be surprised. I'm not going to short it, but I'm just telling you, be careful on the adding. Again, if you draw an ascending channel, this is the mean-ish, and the pivot zones are really where we are, but a better one would be at 32 and maybe at 37. And this is a weekly long-term chart. Zooming in a little bit, you can see how the bears have the advantage. They are selling rallies consistently. So you got to respect that, and I don't think the bulls respect that. They just add. So level-wise, yeah, I can still see the same levels. Like, what's it going to take to break 50 on a normal stock? Okay, they have not filled this resistance area. This one has filled, but it's still a resistance area. So I'll move it here. Take out the hash marks. And you have many more below it, so I won't bother with them. CCL, I most definitely would not be long this company or this whole industry. This will bounce, can bounce to 25.50. I think I would use that to exit. This weekly chart is somewhat bearish. It's not exit like as in if you're an investor in the stock, if you're a trader in the stock. If you're an investor in the stock, do your thing. Okay, I don't know what it would take to bring it back to 70. This is not the same world. Visually, looking at a monthly chart, that's like a super long term to the 90s. You can see how if I put a skewer right in the middle of the whole thing, can I? I sure can. What if I put a box around this candle right there? Why did I pick this candle? It's a month fighting inside the middle. So you can probably find a little bit smarter zone, but how about this right there? Visually, you can split it up like that. So they lost it convincingly, and now they have that overhead above us. So go to a weekly, you'll see where that place is. Look at those weeks. The pandemic, you know, that wasn't their fault, but it happened. And this, I think, can drift back down to 18 or 16. As an investor, there's not much to do. As a trader, I would lock and re-engage. And if I just got in now, okay, I got you. As long as they're above 22.60, I'm happy, and you can probably get a rally up to 25.20. That's the trading comment. Okay. Who is this? Earnings in 3 days. I don't know what to say. Sellers at 25.50, buyers at 21 and 20. You can probably get the 19.50 with no issues, and if you do, you probably go lower. If you take out 25.50, you explode higher to 28.50. But there's a coin flip coming, and it's right in the middle of the range. It's a lot of guessing. CELH, huge positive response. If I was stuck in the stock, and I remember I had a trade that got us stuck in the stock at 35 or 38, something like that, I would have been out like a light. If anybody took my trade and got assigned shares and didn't exit here, close to break even or a little red, I don't know what to say. The report was not awesome, okay, and it overdid it. So I don't know what you're asking. Would you go long here? Not a chance. Would you go short? Also not a chance. It is a stock that I'm not interested in. I'll tell you why. If I'm investing in a company, I want to know that the investors in that company are not idiots. And the way the stock is moving, it suggests that the investors in that company are not very strong. They spit it out like they loved it, and then they hated it, and they didn't defend it, and it went to hell. So I'm not on board. You can find something better to trade. I would use strength to fix my problems and exit. Let's say I doubled down on the dip and I'm green now. I would not hesitate to exit at the risk of missing out. Who is this? Charter Communication. Stuck. Super strong buyers into 320, 310. Super strong sellers into 400. I don't think it can break above 410. If it approaches 410 and I'm trading it, I would exit. And if it dips, I would not be scared to see it fall into 310 because it should find buyers 300. So if I have a credit put spread, maybe an iron condor works. I don't know how liquid it is. So range bound trade is what I'm saying. Colgate. Not an obvious point of entry. You can see how they tried to hold 91 and failed, and now they tried to get into it and failed, and now this is another effort. The best case scenario is 95. And I think they repeat that same process with a lot stronger sellers. 94, 95, 96, very difficult to overcome. You need to get to 99 to tell me, oh, okay, maybe we're going to 104. So if I'm long for a trade, I would be exiting here. If I'm an investor, then do your thing. I don't know what you're asking me. It's not, the chart doesn't look gross, but it's not that exciting. Like, let's say the market's correct in the next couple of months. This one could be at 78 and 74, no issues. So if I invested at 102, I'm not adding here. Maybe that's what you're asking. Comcast, very volatile stock. Please don't trade. Don't trade it short term. If you sell put spreads and call spreads or buy calls and puts short term intra-week, it will punish you. It's crazy. It's absolutely bonkers. 1 minute you're making money, the next minute you're at maximum loss. Okay, so they took a spill at the earnings reaction and now they've erased it. Not an obvious entry point. You have all these sellers right now above you. If you bought the dip on earnings for a trade, I would be exiting. If you invested money and you lost money here and now you're looking to add because you're feeling better about it, I don't think it's the right thing to do. As an investor, there's no rush to get in. As a trader, this is going to be difficult to overcome the next few bucks. Conoco. So oil had a weird move this week. There's one thing for sure that this president here in the U.S. promised. He's out to destroy the price of oil. I don't know why he hasn't been able to, but the investors in the crude oil market have ignored him. I saw strength in the oil market, and if I was long stocks, I would have divested them, oil stocks. Like if I was long Conoco, I would have exited at 102 as a trade or an investor. If you're a super long-term investor, there's nothing to do. The P&L is not that great. Look at it. And the stock is very, very, very choppy. And this is an up chop that's coming down. So now the question, and the drum roll. Here's something that will probably scare you. If we lose 94, I don't know that we will, but if we lose 94, this thing is going to 87 and 85. Look at it left. I would have said the same thing here. When it was at 108, I would have said, if we lose 102, we're going to 92 and 91, and we came close. So now they're trying to recover 102, and they haven't. They went to 106, but recovering 102 is going up and holding, and they didn't. And they haven't made a lower low yet, but if they make that lower low, they confirm much, much lower prices. Costco. Great company, bearish chart. It hasn't played out bearishly. Earnings in 11 days. This better be perfect. And I'm not talking the report. The report is going to be amazing, and no doubt. It's what they say about the future. I'm reading some tea leaves. I could be imagining things, but I'm reading some tea leaves that large companies are preparing for a potential recession in the US on the spending. Consumer spending might be challenged coming. I don't have proof. That's a theory of mine. Just keep that in the back of your head. If we do the regression analysis on this one, the simple regression analysis, so this is not an obvious entry point. Just draw here. Hopefully there's not a lot of noise on this chart. Okay, we can do it. Again, regression analysis means I'll take a span of time. I'll start it up here and I'll end it down here. I'm not influencing it. I promise you. It just automatically does a regression analysis, and it puts lines that best fit the patterns. So this is a channel we're traveling inside. Okay, that goes back to 2023. This is they just hit the upper range of this imaginary channel, and they just reverted to the mean. Okay, so I'm going to take it out and zoom out to a monthly chart. You see how the story changes? How about a weekly chart? And make a similar statement. I'm going to go up to 2019. I'm doing this way to tell you that I'm not influencing the steepness of what comes out. It's automatic. We're above the multi-year channel. So the easiest thing to say, it's not an obvious point of entry, right? Nope. But it is too expensive, like relative to itself. Great company, buy the dip, yes. This is not a dip I'd buy. As an investor, there's no rush. You're going to miss out. You're going to miss out on, I don't know, $50 of upside. So if you buy 10 shares, $500, why? What's the problem? So not for me. You could convince me to sell puts to own shares. That's a big stock. I would never recommend it. But even then, sell a put spread to start. And then if it falls and you sell the protective put, and then you would have a better entry point. This did deliver on its promises. The resistance was broken, so now this letter R should be replaced with a bunch of support. So if I was true to myself, I would delete that and draw a big letter S inside of here. And it's a big zone. And it starts at 1,000, gets stronger at 960, gets even stronger at 900. If you lose 900, good Lord, have mercy. We're going to have a large correction out of this one. I don't think it holds up here, because that means something broke somewhere. So, but it will be a buy the dip with a stop moment. What do I do here? Nothing. I watch. I sell a put spread. I sell an iron condor. Earnings in 11 days. We'll trade the earnings. If you want, come get me during the day before they report. CrowdStrike. Buy the dip company for sure. It went to the moon. Every dip gets bought out pretty quickly usually. Let's see how long before they step into that one. Look here, it looks, oh my gosh, yes, solid support. And then you zoom out one period of time And you look and you go, what? We're still in all-time highs. Yes. So it should have a lot of buyers scattered between 390 and 340 and 330. That should be bulletproof. It should be bulletproof. But that wasn't the case last summer. Something happened last summer. I don't remember. It fell. Oh, yes. Some sort of a shenanigans. Okay, so here's a theory. It was basically here last summer at all-time highs. This level matters. I should put a line there if I don't have one. Maybe I do have one. I do have one. This box matters because look, in March of 2024, we had a pretty violent reaction up on an earnings report and it fell. I think that is one earnings reaction candle. And then we broke from it and then we crashed. So let's split the crash in half. Let's say this was an overreaction. Delete everything below the white line. So the zone of support is from 380. I'm going to give them an extra $10 scattered through 280. So the closer to the middle and the lower end of that zone entry points, the better. So wait for it to fall a little more, sell some naked puts inside that zone, and you would not be making an easy mistake as long as you can add to it. If this stock, if the stock market corrects, this one will come back down to the low 200s. On its own, I don't think so. It's got a lot of momentum. This dip may not be done. Yeah, no, I remember what happened. You know, the biggest technological breakdown in the history of this country, I think. And they bought it up and they made a new high. So you can tell the buyers in this company are very well convicted. So I think rallies into 436 will fail. We'll see. And I think it goes to 380 or 370. It's easier to go there than it is to make a new high. How about I say it's easier to get to 375 than it is to get to 460? That's a fair statement. Cisco, is this the one I bought puts in? I think so. I'm short Cisco because it's a dinosaurs and they're extinct. No, that's not that. They're not extinct. They live out with the Yetis. No, the trade is based on a prior fail. I'm looking left and it's failed there. I'm looking at the extensions they usually run. I'm looking at a pretty boring P&L, which is usually good for me. Solid P&L, pretty boring. And why is the stock at all-time highs? Why isn't NVIDIA at all-time highs? So again, this might get a little positive reaction from a positive reaction to NVIDIA. It will follow the market. So I guess if I'm short Cisco, I'm short the market. I don't think it was expensive to be short Cisco. So it's something to do. And the easiest way to put my trades into word, this is not an obvious entry point. The reaction with the earnings was massive, and I think it left a lot of tails. Tails are evidence of sellers. I think there's a bunch of sellers above 65 for the short term. Dominion. Okay, that red band is resistance. I think this thing can hit 56, give or take 50 cents, and maybe even 54. And it has a lot of sellers above. You can take it or leave it. I don't have any big feelings about it. Look left, a lot of sellers through 60 and 61. Like, what's it going to take to beat this guy and that and that and that? That's the opportunity for the upside. A lot of support below. So it's a pretty hard, there's nothing to do here. Maybe a small dip to 55. Dash. So Dash is back into the straddle trade from the earnings. I don't know why you're asking about it. Did you chase it? If you did and you didn't look left, remember the first sticker we saw here today, Apple and ABBV. I said, if you look left, it's not an obvious entry point. If you ask these people, how did it work out last time? All of them. This is weeks. So that's, I'm going to say 2 months, 2.5 months. So 4 months roughly of selling at different times up here ended in a disaster. Definitely not an obvious entry point. In fact, it's an avoid up here. A better entry point will be in below 180, and even better one is below 160. Okay. Datadog. DDOG. They lost the earnings reaction candle that we were looking at, and they fell into the last earnings reaction candle. So you can see this purple box right there from earnings. This earnings, the prior earnings is that blue box, and the one before it is that other blue box here. Let's make it yellow. And that's the emotional response, right? It's a true raw response for stock. You've got huge sellers up here, huge buyers down here, and a big fight in the middle. So now they're at the intersecting point between two different earnings ranges. Circle down here, letter R, we're back in it. So this is the fight that we've had for months, and I mean it. So the easy drop has happened with not a lot of deterioration in the P&L. So one would think it's getting oversold here. If I'm long, I'm not scared right now. If I sold a put or a put spread, I won't defend it. Give me the shares, I'll sell the shares, and I wouldn't lose any money. So if you're in trouble with a credit put spread or a sold put, reach out. We have ways of defending it. Is it an obvious entry point? I mean, it's not a bad entry point. If I'm already long, I wouldn't add. If I'm looking to get long, I can do part 1 of 3 in thirds, 30%, and then I'll double that, and then I'll have room to add a lot. That's the big picture. If you're short-term trading, sellers are at 129 or higher. Big sellers are at 137 or higher. Full out is a 144. At like 142 or higher, I would exit and short as a trade. DELL. I don't trade DELL for reasons I've cited many times. DELL is heavily affected by words from Mr. DELL. They keep doing big strategy things. I'm buying this, I'm spinning off that, and I'm getting money from this, I'm merging in that, taking it public, taking it private. It's very difficult. Going into the letter R is there. So we put multiple levels of support. They used all of them. They needed to. If somebody did a credit put spread there, they made money, but they saw it get challenged. I think there's a seller at 130 or higher, to the point where I can sell a call spread and I can sell a put spread below 102 or 100. So it's range bound. But since it's going into earnings in 4 days, I wouldn't touch it. I think the better thing to do is to react off the earnings. Like if it drops big time and you're a fan of the stock, buy it. And if it spikes, don't chase it after the fact. If you want to trade it, come to me the day before the earnings. The options might give us clues. This stock is not for me, but you're range bound. You have sellers and buyers. Dollar General. I would not trade this stock. This has become an industry that's pretty impossible. They claim that they're a dollar store. There's no way they're a dollar store. Nothing costs $1, not even at the dollar store. I don't shop there often, but I've been to, I don't know which ones anyway. Nothing's $1. Everything is $1.25 or $2.50 and $5 and $7. They should call it just a cheap store and change the name. Technically speaking, 80, that where that red rectangle is, looks like a visual split. This one. So I'm going to say that that's still the case. If you get the 83, look left, those are heavy sellers. So if I'm long as a trade, I would be out. I would be buying dips, and I would be conscious of the fact that in 18 days, there's going to be a big move coming up or down. I have no idea. The one from 2 times ago was a, whoa, disaster. My goodness. So let's go back up to a higher time frames. Yeah. If you're going long because of this gap, I wouldn't. If somebody went long because of this gap, they're still buried. If somebody went long for this gap and didn't get out, they lost their shirt. Gaps are not traded that way. Trust me, it's a science, and there's no scientific entry on gaps right now. Devon, good company. I think it's a bearish setup. As long as it's below 40, it's probably going to 36. So it's a technical trade bearish setup. It's not like for you to sell your stock if you own it setup. Good company. If you bought the dip, it was on my list to buy the dip, but I don't think I sent out a trade. I did discuss it several times. Anything below 34 is a good pivotal zone for a long time, so it's a good entry point. So if I wanted to own it, I would sell puts to own shares comfortably, like every week until they give me the shares. resistance above. I don't think it goes too far though for a while. End phase, same thing. I would sell puts to own shares. This is a target of mine. You can see the white arrow. Finally, I can tell you that rallies into 100s are sellable. We used to sell puts at 100 because it was not ever coming to 100, and now you can sell calls at 100 because it seems like it cannot get back there. If I were to enter the stock, I would sell puts to own shares. I don't mind it. It's an okay company. It's not a beautiful company, but it's an okay company. The industry is weird. If you lose 58, in theory, you can go to the low 30s or lower. That's what scares me. But that's a longer term statement, and it shouldn't be easy. There's a lot of buyers at 59. Alert at 59. I'll put it right now. 59 might give you 52 easily. And that could get the ball rolling. Actually, you see that right there? 58.35. Let's move it there. That is scary. ES. Hopefully you meant Eversource and not the futures. Bearish. I think it goes to 59 before it goes to 67. I think you meant the futures. For that, ask me in the live or watch the video tonight. Eaton. The industry, well, that's part of the reason why the XLI is struggling. Caterpillar, Eaton, RTX, LMT, and company. So falling into a base, a support zone. It could be here, it could be 290, it could be 285, it could be 272, 275. It's all support. So what happens on the rallies? They are selling rallies and making lower lows, and they're trying not to make another lower low. So if I'm long, I'm not adding. If I wanted to go long now, it's a trade. You can exit on rallies because I don't think it can take out 320. And if it does, it fails at 335. So you should know the range with which you're trading. As an investment, I would rather start with a sold put spread inside of a support zone. This way, if it has a bad couple of weeks and it ends up at 275, I sold the put spread. I can totally manage it because I have a lot of profits from the protected put. Get rid of that if you still want to own the shares. Now you have a good breaking even point well below the price you're going to be assigned. Hopefully that makes sense. If not, pop into the live room. I'll explain it to you. And with that, we finished video 1 of 3.